Hello and welcome to the weekly wrap videos. A couple of things to brief you on from the past 5 trading sessions then. We've seen some upside in stocks after a week of pretty heavy losses. This is despite the Federal Reserve conducting another $10 billion QE taper, which was pretty much in fitting with expectations. However, the Fed have brought forward some of their forecasts at the point at which the Fed are expected to lift the federal funds rate from its historic lows of between 0 and 0.25%. So market consensus is now for potentially Q2 of 2015, which is faster than many had previously seen. This is as the QE program is now scheduled to conclude in autumn of this year. This did send treasuries downwards, sending yields to multi-week highs in immediate reaction, with not too much of this original move being paired as we head in towards the end of the week. As such, the dollar has also seen some strength this week, with both euro-dollar and the cable currency pair sustaining losses. In terms of fundamental news flow elsewhere, though, it appears the tensions in Ukraine and Russia have somewhat dissipated, at least from a market perspective, as the worst case scenario of economic and trade sanctions is put to one side by both the EU and the US, as Obama, Merkel and the other European powers instead opt for sanctions against individuals of high net worth over in Russia, such as visa bans, travel freezes and asset freezes. Also, as such, any potential headline risk could emanate from any retaliation in terms of sanctions from Russia themselves, particularly if they do install any trade sanctions, which could lead to a tit-for-tat trade sanctions war. The worst case scenario there, of course, being on the energy markets, as a spike high in the oil price and natural gas price could potentially dampen the still fragile European recovery. And then over on Wednesday, the UK Chancellor George Osborne presented his 5th budget, which did prompt a lot of movement in the equity markets, specifically for annuity providers, as it did scrap the requirement for annuities for pension holders. As such, the likes of Standard Life, Aviva and Prudential sustained some pretty hefty losses as the demand for those products did dwindle. This was also paired with some downside in some of the gambling firms in the UK, the likes of Ladbrokes, who were sent spiralling after the taxation on fixed odds betting machines rose to 25% from 20%. In terms of the macroeconomic situation, though, they are to issue less gilts in the 2014-15 fiscal year than previously expected, which did support some of the upside in gilt futures that we've seen over the past 2.5 days. In terms of the next week, though, there are a couple more risk events on the horizon, but not quite as busy as the last week we've seen. We have the latest UK inflation numbers and the German IFO estimate after the ZEW survey this week did miss expectations. Of course, we'll bring you all those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.